Okie dokie. Okie dokie, everyone. Can I start off by saying either a good morning, or good evening, or good afternoon, or even a good night? I know that's not in order, depending on where you are around the world. And welcome for joining me on tonight's webinar, which is called, second part of my 6 episodes now, called How I Discover the Mind Behind the Market, Part 1. Written by yours truly, which is myself, which is James Alexander. I'm the market analyst here at Banc. Now, let's give you a brief introduction on myself. Like I said, I'm James Alexander. I'm one of the market analysts here at Banc. I have over 20 years experience in the financial service industry. I actually started off at the age of 18, where I started doing mortgages, commercial mortgages actually, for buy-to-let and commercial properties, before moving into pensions and alternative investments. I then entered the online trading arena around about 12 to 13 years ago. I've traded myself through a prop company. I specialized in gold, trade gold options through Dubai Gold and Commodity Exchange. I've also ran several floors, one including the Philippine Stock Exchange and one in Borough of London. I'm a published writer, and I've had several articles published on my opinions on the market in leading publications, including the likes of the Financial Times Advisor, Market Watch, and The Street. I'm a very passionate and avid market commentator. I do sort of find myself getting very excited and very into the market. So I probably put this down to the young age when I was probably about maybe 11, and my father let me watch the movie Wall Street, and that's how I really sort of started finding my passion for trading, etc. And I'm also a well-known public speaker. I've traveled around the world and I've spoken at several leading industry events like Singapore, Dubai, Qatar, Kuwait, Bahrain, and obviously London, Manchester, Berlin, and more recently South Africa with Joburg, Pretoria, and Cape Town. Now, tonight's topic, like I say, this is probably like the 6th episode now of my Discover series. Now, this one is part 1, because this one is about discovering, like I call it, discover the mind behind the market. And because it's been obviously quite a big subject matter, I've decided to do it in parts, because what I'm really going to be discussing in my Discover the Mind Behind the Market series is the psychology of trading. Okay, because that's really is, in many ways, the sort of like the secret of the crux to try to find your pathway and find your way in trading, and really to find out if you got what it takes to be a trader. Now, today, I'm going to focus on, like I say, it's part 1. I'm going to focus on fear. Fear. So we're going to discuss today what is fear, what is the biggest fears of trading, the battle of fear and hope, which is huge. This is one of the biggest challenges every trader faces. And if you can crack this and break this, then you stand a good chance of becoming a successful trader. How to overcome the fear of trading, understanding that losing is a part of trading, because that really will help you find your way, and how to control your losses. And then at the end, of course, we'll have a quick question and answer session of any questions someone might have in relation to the topic. So, what is fear? Now, fear is a distressing emotion aroused by impending danger, evil, pain, whether the threat is real or imagined, which leads to the feeling of being afraid and not in control. As you can see, that's an official quote by www.dictionary.com. Fear is also the concern and anxiety and anticipation of the possibility that something unpleasant will occur. So that's the official definition of fear. But what do we mean by fear when it comes to trading? Now, the biggest fears of trading is as follows. Fear, of course, of losing your money, not just losing your money, but losing more than just your money. Fear of missing out. That's a big one, because so many of us make that mistake and we fall prey to fear of missing out. Fear of not being right. Fear, and again, this is one of the biggest problems that most traders let themselves down with, and is probably the biggest cause of most trading accounts to go into the negative, is a fear of letting a profit turn into a loss. So let's go through these one by one. Fear of losing. Fear of losing when trading results, or should I start that again? The fear of losing when you are trading results in several outcomes. Number one, the fear of the loss can make the trader delay their decision making on whether they will enter or exit that market. We're scared that we're going to lose, so we hesitate. We stay ourselves on the sidelines. Another one is by not having the ability to be committed to when to enter or exit the market, leaves the trader with the belief that they are avoiding potential pain, are not moving forward to potential profit, because again, it's holding us back. It's keeping us stuck. We're not moving forward because we're too scared of that losing. The fact of the matter is, and this is the biggest thing you need to sort of get into your heads when you're looking at trading, is losing is a part of trading. And every trader, no matter how good you are, is going to lose at some point or have losses. And the answer to this is not to try to, stop your losses by avoiding them altogether, but it's by controlling them, by trying to keep on top of them and keeping them to the minimum. What am I by the minimum? Not by the minimum number of losses, by all means. No, I don't mean that. I mean by keeping the actual value or the cost of the loss to the minimum. Again, we'll discuss a little bit more of that in a second. Fear of missing out. Now, this one really is more to do with greed. We know this, okay, when, this is a human quality as well. That chance that, if we don't jump in, we're going to miss a great opportunity. And this is something I always say to everybody I've ever dealt with, especially in my time when I was dealing with portfolio management, is that, look, the market is never going to go away. The market is here to stay. The currency market itself is 24 hours a day, Monday to Friday. So even if you miss one thing, okay, there's always going to be another opportunity. But this is the problem. People get greedy and they don't think like that. Instead, what happens is they jump into the market, okay, without really any formed research into an idea. They jump in based upon desire to be a part of something that is moving, and they have no understanding of why that asset or why that currency or commodity or stock is actually moving. They just see it moving and they want to be a part of it. They don't understand. And this is really dangerous, because by jumping in blind, you're not taking into account the huge potential downside risk. You have no control of your risk at this matter. You're becoming emotional. And those who fall prey to fear of missing out, or FOMO, tend to jump in too late. And their decisions, like I say, are purely emotional, not rational, and it ends up wiping out their account. Fear of not being right. Now, let's be honest with ourselves, okay? We're human, right? And we like to be right. Think of all the times you've had a discussion with your friend, about historical fact. And then they Google it, and you're right about it, because they disagree with you initially. They Google it and they find out that you're right. it gives you a nice feeling that you're right, doesn't it? And we like to be right. We don't like to be proven wrong. We don't like to be wrong because, again, it's a certain stubbornness or arrogancy in our belief system. And a trader with no plan or structure wants to have nothing but winning trades all the time. And this is wrong because, like we've already said, losing is part of trading. And the reality is we can't be right all the time because the market is far, far bigger than anyone. And that can never happen. So the answer really here is accept that you're not going to be right all the time. And instead, you need to implement better risk management practices. Fear of letting a profit turn into a loss. Now, this is one of the biggest challenges every trader faces. And this is all part of the, the hope and fear scenario I was talking about. And I'll go into more detail about hope and fear. Now, everyone who starts out usually does this without failure. Fear of letting a profit turn into a loss is very different from a fear of losing, as it's based on a memory of a previous experience. This is also, like I said, known as a battle between fear and hope, and it is probably the most common reason that most trading accounts go into the red or go into the negative. So let me tell you a little bit about the hope and fear and see if you can relate to me. Now, let me paint you this story. Imagine this. You have a winning trade in the market. And because you're winning, you're human, you start getting that happy feeling. You start feeling good about yourself. You start feeling excited. Now, here's the problem. Or you in previous experience, you start getting scared then. You start to think that any minute now, the market's going to turn against you, and that winning trade is going to turn into a losing trade, and that happy feeling is going to disappear. That happy feeling is going to go. So what do? You snatch at that profit. You close it really quickly, making a very small gain. Now, admit to yourself, who does this? And I bet you all do this at some point. Now, let me tell you the other side of the story. This is called hope. Imagine this. You have a losing trade in the market. But instead of closing this trade, you close the trade taking a small loss. Oh no. You keep the position open, hoping that market will turn around in your favor. But let me ask you the question. Does it turn around in your favor? And the answer is no, it doesn't. Instead, it gets bigger and bigger and bigger. Beforehand, you know it, you've put more money in to keep the position open, so you're losing even more money. And before you know it, you're taking a far, far bigger loss. Now, the battle between hope and fear is the most difficult challenge to overcome. And if you look at the majority of trading accounts, or even look at your own, I bet you will see a large majority of winning trades, but the account is still with a negative balance. Now, you can have 70% profitable trades, so 70% winning trades. However, if you're unable to swap fear and hope around, like change your mindset around, i.e., when you're in a loss, fear it's going to get bigger and close it, or when you're in the profit, hope it will go up further and keep it open, the chances are your accounts are always going to be negative because your gains are always going to be small and your losing trades are always going to be large. So if you're able to flip it, if you only have, say, 30% profitable trades, and you are indeed able to swap hope and fear around, the chances are your account could be in the green, as your successful trades will have larger profit margins then you're losing trades. And like I say, this is the toughest thing to overcome. Toughest thing. But this is what you need to try and get your mindset behind to try and help you achieve this. Now, how to overcome the fear of trading and the battle of hope and fear. So fear of losing, solution. Understand losing is a part of trading. So never trade with more than you can afford to lose and implement strict risk management protocols. Fear of missing out, solution. Take out greed and passion from your decision making. Instead, use patience and research your idea. Properly study it. Properly look at it. Go in with a proper decision. Also, be a little bit more clever with your trading. Instead of just clicking trade now or enter a trade, have a think about it. Plan it more. Use limit orders and stop losses. Understand as well that even if you're missing an opportunity, don't rush in not understanding why it's moving, but go in understanding that there are always new opportunities. The fear of not being right. Solution. Understand at the end of the day, no one is bigger than the market and you will never, ever be right all the time. Understand that being right does not mean you will be in profit. Implement risk management as well. For when you will get it wrong, because you will, make sure those losses are controlled. Fear of letting a profit turn into a loss. Solution. Understand the emotions that you will go through. Understand what is making your mind tick and what those feelings are being affected by. Understand as well why it happens, why you're going through those emotions. Start keeping a trader's diary and take the time out properly to develop a trading plan and keep to it no matter what. Now, like I say, one of the biggest fears, of course, is that, a fear of losing. But we need to understand at the end of the day, losing is part of trading. The most common mistake that most new traders make is to be a success at trading. You should never lose. That is rubbish. Being successful doesn't mean you don't lose. That never happens. So that's absolute total rubbish. So you need to stop thinking that, or never ever think that. Because those who do that leads them to search for the secret answer, the holy grail, the golden secret. And guess what, ladies and gentlemen, this does not exist. The fact of the matter is, and in reality, the most successful traders will have about a win to loss ratio of 50%. Now, how to cope with losing? This is how you cope. Acceptance. Accept that losing comes with trading. Begin to love your losing trades. Begin to love losing, because this is how you start to learn about yourself. You learn about the market. You start learning about mistakes. Reduction. If you're getting hurt too badly, lower your trading exposure with smaller contract sizes to control it. And if you're having a really bad day or a bad week, walk away. Take a break from it. Do not revenge trade. Journal. Keep a trader's journal. Write down your trades. Write down your reasons why you're making that trade. Write down your experiences. So again, you can learn. Because losing, this is how you begin to learn a bit more about yourself and a bit more about the market. Knowing when to let go. Like I say, hope and fear. Biggest challenge is closing that losing position. So you need to know when you need to cut. You can cut your losses early. Make sure you implement stop losses. Use stuff like trailing stops. So cutting losses early. How do you do this? Reacting on a loss is not always the way forward. Seeing a loss and then acting is not always the right way. So cutting losses early really shouldn't be part of your strategy. Instead, you should be able to enter the market and should already know before you click trade now, before you've already got in, that when or what time you will exit the market, even the profit and loss. So that should already be planned. It should already be part of your strategy. Your plan should already be established on when your losses will be cut based upon your trading style and your trading strategy. Stop loss. One of the key elements to your plan should always be your stop loss is set. Where is the maximum amount you're going to lose on that trade? That should already be planned. You should be planned that already. By setting a stop loss, you straight away are managing your exposure. A stop loss should be based upon your account size, though, your contract size, your attitude to risk. It should be based upon, sorry, excuse me, how much you have in your bank, in your trading account. Part of your strategy should already be established by that. It should be based upon as well your risk management structure. This will also allow you to calculate your risk/reward ratio. Trailing stops. So many people don't use this tactic, and it really sort of this all bugs me a little bit because it's a really good strategy. I tell you a story once. excuse me. Okay, now back in the day when I had a portfolio. I was portfolio manager. I managed accounts of about 18.5 million of individual traders. Okay, I had one particular client of mine. He was a cable trader. He traded the British pound, US dollar. Anyway, he had a number of really good long positions in the market, and they were doing very well. They're very profitable. And we're having a chat, and I was saying, look, you're doing really well. As a suggestion, what I would look at is maybe moving your stop loss up to lock in some profit and protect yourself. Because in, say, about 20 minutes, we have, it was Mineral King at the time, I think it was the head of the Bank of England. Mineral King is speaking and on the UK inflation report, and it might have a bit of an impact on the cable direction, on the British pound's direction. So it might be a good idea just to protect yourself, okay? Just maybe move up your stop loss, protect your exposure, but also lock in a bit of profit. If the market suddenly turns against you, it might be a good idea of trying that. And he went to me, James, don't worry, I know what I'm doing. I know the cable, I'm not scared. I'm not scared of this. I got this. I went, well, fair enough. It's your call, your decision. It was just an idea. Anyway, 23 minutes later, after Melvin King had started talking, the British pound plummeted against the US dollar. And all these positions turned into a loss. And this client called me back up and going, James, what the hell happened? What's going on? I was doing so well and now I'm in a loss. What's happened? And I said, well, look, I did tell you it could have been a good idea, but you could at least done a trading stop, something like that, just in case something like this happened. So, it goes to say, at the end of the day, it's a good method to try and use. But, okay, James, what is a trading stop? Well, a trading stop is this, okay? A trading stop moves when your asset you are trading is moving the direction you've anticipated. So it's a winning trade. By using a trading stop, what you do by moving your stop loss up is you reduce your risk and lock in some sort of form of profit. Let me give you an example. Here's an example. This is a gold chart. So say, for example, we enter the market here, okay? And we set, because I always believe in stop losses, we set our stop loss just a little bit below the low of the sort of the recent candles there. So that's our initial stop losses. Okay, the market moves up, and then what we do, we move our stop loss up. We move our stop loss up, and what that does by doing that, okay, we're locking in, we're taking out our exposure, the risk we had in the market, but we're also locking in, because we entered here, some form of profit. So what was that? So that's, I'd say $2 profit on this example. We're locking in $2 profit as well. Okay. And then what we do, if the market continues to move up higher, we then move up our stop loss again, a trailing stop again, number 2, again, locking in the profit, taking exposure. So if the market spikes down, we've got it covered. And we're basically following the direction of the market and moving our stop. It's not a take profit. It's basically locking in our profit and our exposure by simply moving our stop loss up. It's called using a trailing stop, and it's a very good method. Now, other future educational events to come up. On the 18th of October, I've got one called Discover Trends and a Raising Market. That's, again, we're going back a bit more technical analysis based. We'll be discussing how to recognize a trend, a difference between a trend and a ranging market. That's on Thursday, the 18th of October. And then on Thursday, the 25th of October, again, technical based, it's called Discover Elliott Waves. And I'll be discussing how to use Elliott Waves in trading and indeed, what is the Elliott Wave theory. So, on that note, any questions at all? Anybody like to ask me anything about this subject or this webinar? Please feel free to ask me now. Any questions at all? Did everybody at least enjoy it? I found it interesting. Hello? Everybody find it enjoyed it at least? I found it interesting. Well, can anybody at least relate to the fact of hope and fear? Have you done that? Can you admit to yourself that you have fall prey to that and you've done that before? Any questions at all? Don't be shy. You can ask me anything. Okay, did you at least enjoy it and find it, or are you absolutely sick of my voice by now? Anyone? Okay, excellent. Joe. Thank you, Joe. You enjoyed it. You found it good. Thank you, Joe. Did you, Joe, can you admit to yourself that you have fall prey to hope and fear? You've done that yourself? Yeah. Well, look, don't feel bad about it, Joe. Don't feel bad about it because, and I mean this, everybody who starts out in trading, every single person does this. They always fall prey to it. They can't help themselves because it's a human thing. It's a human condition. Okay. It's because I tell you, it's psychology because we have the limbic system of our brain. Okay. Which is the frontal lobe of our brain. And that controls our memories as well as our emotion. This is why, for example, we understand that fire hurts. We touched it as a child. We then have a fear of fire because it's our emotion linked with our memory. So when you've got the hope and fear scenario, it's very difficult to overcome because maybe in our previous trade, we've got that experience of that winning trade going into the losing trade. We've got the experience of a losing trade, closing it and the market then being spiteful, like it seems to spite us, going into profit. And we're like, I shouldn't have closed that. I would have made a profit. So it's based on that. So this is why it's the most difficult challenge to overcome. It's a very tough one. But yeah, Joe, that is. But the thing is, once you've cracked it, or if you can crack it, if you can overcome it, then yeah, you've got a really good chance to become the trader you deserve to be. Become successful at it. Other than Joe, is there any other questions at all? Anybody else like to ask me anything else? Okay. Is there, because don't forget, I do the Discover series and I write this series for your benefit. for you to sort of take this information, take it on board, and hopefully learn from it. Okay? And take it with you so it can help you with your education and find out what sort of trader you want to be. So if there's is there any topics or any subjects in the future you would like me to maybe cover or to do? Don't be shy. Feel free to ask me. It gets very lonely talking on my own. I've got Joe asking me something. Does anybody else like to ask me anything? I'm here. You can ask me anything. Apart from my personal life. Well, you can ask me a little bit about my personal life. Whether I share it with you, it's up to me. No questions at all, no? Is there any topics you'd like me to cover in the future? Okay. Joe's coming again. Could I do one on Bollinger Bands? Yes, I'll do. Do you use Bollinger Bands at the moment, Joe? Oh, you do? Okay, they work for you, yeah? So are you more like a range trader or a... No? Yeah, I saw. Okay, a bit of a range trader. Okay. Oh, okay, I've got another question here. Adrian. Hi, Adrian. How are you doing? Oh, you enjoyed it too. Oh, good. I'm glad you enjoyed it. Excellent. Could I do one on the different trading styles? Yes, of course I could do one on trading styles. If you'd like me to do one on trading styles, certainly. What's your style at the moment? I don't have a style. I'm trying to find my way. Well, okay, that's fine, Adrian, because I'm here to try and help you find your way and all that. That's good. Okay, if there's no further questions or anything else, but Adrian, I will do one on trading styles. Joe, I will do one on Bollinger Bands. Special shout out to Joe and to Adrian. Thank you for your interaction. It gets quite lonely, so it's nice to have a bit of interaction. And thank you for your questions. So that leaves me on this note. Can I say thank you to everybody who joined me tonight? But on that, can I wish every single one of you either a very good morning or a good afternoon or a good evening or even a good night, depending where you are around the world. Till next time, every single one of you, trade safe.